This is Japan Market Brief. Here's your daily update on Japan markets for global investors. Japan's equity market looked calm on the surface to start the week, but the deeper story was still about the yen, intervention risk, and how investors are adjusting to a more active Bank of Japan. The Nikkei 225 was almost flat, down just 0.07% to around 53,784. TOPIX was also little changed, which tells us that broad risk appetite did not collapse further after last week's stress. In foreign exchange, dollar yen held close to 159, keeping the currency story front and center. US rates were steady, but still high enough to keep pressure on the yen and on global duration-sensitive assets. The biggest headline was renewed concern about possible yen intervention after political warnings in Tokyo. That matters because a weak yen can help some Japanese exporters, but once intervention risk enters the picture, traders stop treating currency weakness as a clean positive. Instead, it becomes a source of uncertainty for the whole market. At the same time, investors are still absorbing the fact that the Bank of Japan has pushed its policy rate to the highest level seen in decades. That is a major shift in regime. The market now has to price Japanese equities, bonds, and the yen under a less accommodative policy framework than before. In foreign exchange, markets stayed on alert for a policy response if yen weakness extends further. That kept traders cautious, even without a dramatic move in headline index levels. In monetary policy, the message was that Japan is no longer in the same zero-rate world investors had grown used to. That change matters because even a slow tightening cycle can reshape valuation assumptions across sectors. And in broader macro positioning, dollar strength ahead of key US inflation data helped keep the yen under pressure. So Japan is dealing with both domestic tightening and an external currency backdrop that still works against rapid yen recovery. Watch three things next. First, whether dollar yen pushes far enough to trigger stronger intervention language. Second, whether the BOJ's tightening path becomes clearer or more contested. And third, whether Japanese equities can stay resilient if rates keep rising without a meaningful rebound in the yen. That is your Japan market brief for today. Thanks for listening.